Good evening. Welcome to the ShadowTrader video weekly for Sunday, May 19th, 2013. So, coming up into this video for the last few weeks, I've been talking about an S&P channel resistance, which actually hit this week. This was actually on May 14th, which was Tuesday, and the channel didn't hold. We actually closed above it, and then actually went higher the next day, and took off from there. And now we're trading on the outside of the channel. This is extremely, the same overbought situation that I've been talking about for a while is the same in terms of now it's really extreme because you're on the backside of the channel, which usually leads to some sort of correction, and also the extreme distance from the 20-period moving average that we're seeing here on the from the distance between the 20 and where price is now. If you look at here, we're at 1667. Right, and that 20 is at 1613, and as I've been saying, 40 points is where it gets extreme. And now it is 7 minus 3, 4, 54, excuse me, right, 54 points extended, 67 minus 13. So, anything over 40 is, I think, too much, usually leads to a correction. If you go back historically, usually leads to some prices coming back in, but we're just not seeing it. So I think risk of being long here in terms of new longs is pretty high, just given, the overextension and also trading on the backside of the trend line. That being said, we had some interesting signals in the profile recently, and I'll see if I can't get that up here. Okay, so looking at the profile here coming into next week, there's a couple of things I want to show you, mainly on Thursday and on Friday. We have a large area of balance here where there is value here in the market. This is essentially value, and look what happens when traders basically get away from value. All this action here is away from value, and then Friday's late day rally is really away from value. Price and value can't diverge too much. They tend to snap back to each other. And you can see here that the point of control, which is the fairest price to do business on Friday, is actually down here at 56, yet prices all traded all the way up to here at 66. So Friday's action is really the opposite of Thursday's action. And what happened on Thursday, right? Price closed low. There's the close. And yet value and the fairest price to do business were up here. And the next morning, what happened? You gapped up. There's your open, and then you just took off, and you kept going. So Friday's action is really the opposite of that, and I wouldn't be surprised if Monday we come in a little bit, because these buyers here are definitely long at bad prices. They're buying away from value, and value is really here. If that's the case, if we do get a gap down, then this would be kind of an excess high. This is somewhat of an excess high already in that, you have your 4 periods of N right here. You definitely have this sort of very skinniness in here. We did have some excess on the profile here on Wednesday. That since has been negated. We had a poor high here on Thursday, which needed to be repaired. It definitely got repaired, so that's been taken out. And here you definitely have some skinniness on the profile. So what I'm going to be focusing on Monday is basically where does price accept or reject in relation to this spike. That's the important thing. That's basically how the profile works. Is if price accepts in here, then it tells you that the spike is legit and market did not auction high enough to bring in any real sellers. If price accepts more down here, then this is kind of excess. These people are long at bad prices. They probably sell the market a little lower, and you see a move down like this. But this obviously we'll have to see until Monday to see how this materializes. All right. So that is the profile situation. Let's get back to the ES here and the market. All right, so that is the profile situation. I'm going to just minimize that, go back to the S&Ps here. One thing that I wanted to point out, which is bullish in this market that I'm seeing, is the fact that we're starting to get sector rotation. In that, if you recall, we were talking about that the market was getting ahead of itself when drug stocks, for instance, like DRG, here were just rallying straight up. You had kind of like this parabolic move up. And also, for instance, like healthcare, like DJUSHC, same thing. Well, now what's happening in the market is that these sectors have pulled back, while sectors such as, financial, for instance, like here's broker-dealers, have just gone much, much higher. So how does this bode for the market? Well, I think that these sectors like financial and energy will have more of an impact on the broad market when they come down, if they do. And you can clearly see that some of these are getting overextended here. But the point I'm trying to make is that the market actually could go much higher from here because now it's starting to rotate. It's not like everything is overextended. Drugs, utilities, pharmaceuticals, etc. Right? Let's take a look at utilities. They're no longer overbought. They've taken off some of the froth. So it could easily be a situation where, you know, maybe these broker dealers, banks, etc. come in a little bit, and these dividend type stocks keep rallying again, and the rally continues. So that is a possibility that I'm looking at. I don't have any targets on the upside. Again, to me, it feels that it's extremely high risk to be initiating new longs here. It's relatively rare that we trade on the outside of the channel like this. That's usually a danger sign that the market's getting overextended. Plus, the slope of the advance is extremely high, right? We have an extremely high slope. So I've drawn a couple trend lines here as to where it could come into. So as far as these trend lines are concerned that I've drawn, there is some area where you can look for support points if the market was to pull back. Basically, the main two references here going forward, I would say, are this trend line here, which is the dominant one from the April lows that puts the market at about 1640, and then these pullback lows here. These are very important. This is the 1620 pullback low. Those of you that have been following the blog and you know a little bit about market profile know that we've talked about this 1620 level a lot, right? We had a double bottom there here earlier in May, and you can see not only that, it was more like 3 times you had equal bottoms. You had bottoms there on May 8th, May 9th, and May 10th. So that's also going to be a key area. The market would, on a downdraft, the market would probably move to that area, and then a loss of that area would probably lead to lower prices because you know, it is a triple bottom. So just watch going forward. If the market comes in a bit, watch 1640 and watch 1620. Okay. All right, that's all I have for this week. I just want to quickly remind everybody that if you're interested in some of my comments about the market profile, I do write a blog every single morning. It's right at ShadowTrader.net. It's free. Just go to the homepage here and click on blog, and you'll see that I give commentary every day about you know, market profile and where I'm seeing the markets coming into that day. Very often there's also a annotated S&P chart kind of showing where my bias is and what the ideas I have going forward. So that's every morning, comes out around 9 a.m. Eastern. Check it out at ShadowTrader.net right in the blog tab here. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.